Hey everyone, Josh Feldman here with Nest Mortgage Group coming to you with another market update. Here it is, Monday. The market opened with mortgage-backed securities positive for the day, which is good. The 10-year Treasury was also down. Definitely looking like we're moving in the right direction this week, especially after a volatile week last week. But I found this really interesting. So it's actually really rare that stocks and bonds consistently fall together and end the year negatively. So since World War II, this has happened 3 times: in 1969, 2018, and so far in 2022. So if the year ended today, it'd be the first time in history that both stocks and bonds were down over 10% in a year. So if you look at that, why is that significant? Well, if you look at the following year in those 2 other situations, we have, so let's see here. The following year after this abnormality occurs, the 10-year yield went down. Let's see, in 1970, it was a decline of 18%, and in 2019, it dropped by 29%. So if we were average in between there, we could see the 10-year Treasury drop 24% next year. Just again, that's just taking an average between the two, the last 2 times this happened. And that would help really support, that would bring the yields back under 3% and would help kind of support a 5% interest rate. Obviously, a lot can happen that could alter the data and not have that come to fruition. But, I truly believe that we're towards the peak of our inflation, and that if we do start to see inflation coming down, we are likely to see mortgage rates come down as well. Also, some headlines that are out there are really starting to speak towards a recession. So whether we end up having a recession officially or not, it certainly seems more and more likely that that's going to happen. And again, I've said it time and time again, I feel we're already in a recession. I think it's very likely that they officially do call it at some point. It just may take some time. So, but again, when that happens, we typically see a 10-year Treasury come down, the inflation would drop, therefore resulting in lower interest rates. So also this week is just a housing-centric week with a lot of reports coming. So we've got the NAHB, which is the Housing Market Index, coming out. Housing starts and permits report is coming out, along with existing home sales, all set to release this week. Existing home sales, of course, we're anticipating that to be down. And so we'll see how everything responds this week when that data comes out. So again, keep in mind, pre-approvals, we're still getting those done same day. Conditions and new files, underwriting, we're at 24 hours. Still getting a lot of, with our 20% down buyers, we're still getting a lot of appraisal waivers. I actually had one today. They had 20% down, got that appraisal waiver. Certainly it saves our client some money with not having the appraisal, but it also allows us to get the loan done even faster. So if you have your clients that are looking to do 20% down and you want to see if they're eligible for that appraisal waiver before submitting an offer, be sure to give me a call and I can gladly take a look at that. So I hope you guys have a great week. If I can help you in any way, or if you have any clients that need a second opinion or looking to get pre-approved, please consider me and I'd be happy to help out. Have a great week. Take care.